Good afternoon. It is 1:30 on Monday. I'm smiling a little bit because my wife is anxiously awaiting to have her tea and cheesecake, but she's trying to be quiet so I can make this video. So I'll try to be brief, even though there's a lot to talk about, an awful lot to talk about. First of all, I want to show you this. It's not sophisticated, but it says it. I said after the FOMC meeting with the start of quantitative tightening, it was going to be Chinese water torture for gold. It was going to be death of 1,000 cuts. 920 down 1170. No, that was the day of the FOMC meeting after Yellen spoke. 921 down $10. 922 up 590. 925 up 1280. That was the North Korean news. Boom, the next day gives it all back, down 1620. 927 down 1140. 928 up 430. 929 down 760. Today, as I was recording this, down 440. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 6 out of 9 days down. I don't see the bleeding stopping. Okay. Stock markets continue to make record highs. There's no catalyst for higher gold prices. All those people that were talking about how the dollar is ready to keep collapsing, well, you know what? Once again, they were wrong, okay? Because now the dollar has found the bottom, it looks like, and it continues to march higher. Okay? So, I wanted to talk about, there's some interesting articles here. First article, China. China proven gold reserves, 12,100 tons. 12,100 tons. That would make them the most country with the most gold, no? China's proven gold reserves reached 12,100 tons at the end of 2016. The state news agency Xinhua reported on Monday, quoting an official with the National Gold Association. China has been the world's biggest gold producer for 10 years and the largest consumer of the metal for 4 years, it said. China aims to increase its annual gold output to 500 tons by 2020 from around 450 tons currently, it said. All right, so they want to produce 500 tons annually of gold. Last year, 70,000 tons of gold were traded in China on spot exchanges, futures exchanges, and over-the-counter at banks, and that amount was expected to exceed 100,000 tons by 2020, Vice Chairman of the China Gold Association said. In the first half of 2017, China produced 207 tons of gold, a drop of 9.8% from a year ago. So they're producing 400, 450, 500 tons of gold a year. China, the world's biggest producer, and yet 70,000 tons of gold has traded hands. What does that tell you? That this paper manipulation, okay, is just sinister, okay? There isn't enough gold on this planet to come even close to the amount of paper gold that's being traded. They produce 500 tons of gold annually, and 70,000 tons of gold are traded every year with these paper markets. No wonder why gold can't get anywhere. But that's not really what I want to talk about. What I wanted to talk about was sentiment. Okay? Jim Rogers, once again, okay? There's a wealth of material with Jim Rogers. You know, he continues to say that he owns gold. He didn't sell any of his gold. He's not buying any gold. All right? Because there's still too many bulls in this market. I don't know what he's talking about. I don't know where these bulls are. Because everywhere you turn around, I'm not talking about the carnival barkers. I'm not talking about the pumpers who are just using this because this is their cash cow, okay? Okay, and there's a lot of those pumpers, all right? I'm talking about legitimate, serious people, okay? There's very, very few bulls in this market, okay? But anyway, he said he'll know when to buy gold again when everybody starts throwing their gold out the window. Okay, fair enough. So basically he's saying it's all about sentiment. It's not about fundamentals, okay? It's sentiment that drives markets, okay? So, there's this article here. Soaring Equities. Let's see. Soaring Equities not going away anytime soon. Blackstone's Wen is saying. I mean, we've had now, stocks bottomed when? 2011? I mean, it's been 7 years, 6.5, 7 years of just nothing but up, up, up. New record high after new record high after new record high, right? All because of cheap money, QE. And now he's saying soaring equities not going away anytime soon. With U.S. equity markets trading near all-time highs and trading in the green for several years now, some investors are concerned a downturn may be coming. However, veteran investor and Blackstone's vice chairman Byron Wien thinks otherwise. In a recent post, he said he wouldn't be surprised to see stock markets remaining strong for the next few years. Based on my analysis, I think we'll have a favorable environment for equities at least until 2019, he wrote earlier this week. However, he remains cautious, adding that he will be watchful for changes in the conditions that brought me to that conclusion. U.S. stock markets have been on a tear, bottoming in March of 2009. That's when they bottomed. So it's been 8 years. And according to this guy, we could have several more years of this. And on the rise ever since. The NASDAQ and the S&P 500 hit new record highs Friday, last seen at around 6,490 and 2,516 respectively. Cycles usually do not last this long. We all know it can't go on forever. We all know it can't go on forever. Really? You listen, and people really, they believe this is going to go on forever. And why shouldn't it? If it just goes down, the Fed will just step in and buy stocks. It can't go on forever. It looks like it will. Cycles usually not last this long. We all know it can't go on forever, but I believe we could continue on a positive course for both the economy and the market for several more years. Recent data shows the possibility of a growth slowdown, but a continuation of the expansion. The slowdown, if it comes, may trigger correction in the equity market, but nothing more serious than that. Nothing more serious. It's the uber arrogance of these people. It's incredible. Look at the VIX. I mean, nobody thinks it will go down. No one. To the long-time investor, the market can keep climbing for at least 2 more years before any downturn begins. His analysis is based on a few factors, including investor sentiment. So, in other words, I guess the sentiment, it's not euphoric yet. It's not, as Greenspan put it, irrational exuberance yet. I would also be concerned if retail investors were euphoric about equities, as they were in 1999 or 2007. They are generally optimistic, but not excessively so. Although early this year, sentiment did rise to a worrisome level, he pointed out. Investors large and small are also leaning toward the defensive. So basically, this market, stocks, bonds, real estate, gold, it's not about any fundamentals. It's strictly about sentiment, okay? Jim Rogers won't buy gold again until everybody's throwing their gold out the window. This guy says, you know, as long as the retail investors aren't euphoric yet, you know, we could see several more years of stocks going up. the last few weeks, everybody's been very, very bearish on the dollar, right? Dollar's going to collapse, dollar's going to collapse, dollar's going to collapse. So what does that tell you about the sentiment, right? They're all on the wrong side of their trade. Dollar's rebounding now. It's bottoming, right? And now it's going up. Many of you might remember several years ago, 2000, I think it was 2007 or 2008, the dollar index was crashing back then. It had gone all the way down to like 72. And the famous supermodel, Giselle Bunchkin, she demanded that she get paid in euros. Okay? Even this supermodel knew, don't pay me in dollars. She says it's not worth getting out of bed for dollars. Think about that. A supermodel stepped in, okay, and weighed in on what was happening with the dollar. Pay me in euros, she said. Right? But it was just about that time that the dollar bottomed and started to go up. And from 72, it went all the way up to what? About 102, 103, right? They called it the Bunchkin bottom, okay? Because usually that's what happens. When everybody gets on one side of the trade, that's just about the time when the trade reverses. So when you have a supermodel demanding not to be paid in dollars, you knew, okay, the bear market in dollars was over, okay? And it was time to reverse. So these last few weeks, everybody's been a dollar bear, right? If you watch other YouTube videos, you see it all over. It's more fake news, okay? More fake news. Now the dollar is bottoming and going up. Many years ago, I told you this story, okay? As gold was going up and up and up. And I saw the signals, but I ignored them, okay? When I walked into my office and there were 3 guys standing around talking, oh, you know what's a good investment? Gold. Yeah. That was the time to bolt, okay? So, these markets, it's all about sentiment. There's no fundamentals. I used to contribute to this blog, and the host, for lack of a better word, used to say, you know, you have to get all everybody's opinion. You got to get all the information from all different sources. You got to weigh it all together. You know, no. Why do you want people's opinions that are wrong? You got to do the exact opposites. You don't get everybody's opinion. Everybody's got an opinion, but it is possible to be wrong. And everybody's been wrong, okay? They've been telling you the dollar's going to collapse for 7-8 years now. They've been telling you gold's going to 5,000, 10,000, silver's going to 200. The stocks are going to collapse. They've been wrong. They missed the move, and now they're just wrong, okay? Rich dad, poor dad, he likes silver. Yeah, where was he in 2000 when silver was $4? Was he trumping silver back then? No, he missed the move. He makes money by writing books, okay? Stop listening to the people that have been getting it wrong. Start listening to the people that have been getting it right. Peter Schiff, I'm early. You're not early, you're wrong, okay? That's it for now, okay? I'm not here to make friends and influence people. I'm here to save somebody from the biggest financial disaster of their life, okay? So all these people that have been telling you to keep stacking and gold's on sale today, let's look at this chart. It's not very sophisticated, okay? It's not like, you know, all these other guys with these fancy books and Elliott Wave, okay? And resistance and support and Fibonacci, but it tells the story, okay? That's it. I appreciate your comments, up or down. It's all good. Thank you for listening. If you have anything to share, please do. Ciao for now.